Hello and welcome to the look ahead for Tuesday, the 25th of February with me, Fiona Cincotta, Senior Market Analyst at City Index. So as we head into tomorrow, Germany is going to remain very much in focus following the elections at the weekend. We've got German GDP data, Q4 GDP data due tomorrow. We also have Eurozone Q4 negotiated wage rates, which obviously can give some implication towards inflation. Over in the US session, US consumer confidence, and then also earnings will be coming from Home Depot. So just starting off with Germany. I mean, obviously, as I said, over the weekend we had the elections. We've had the Conservatives have come out ahead, winning around just below 29% of the votes. And Friedrich Merz is looking to be the next chancellor. He will now begin negotiations with the Social Democrats to form a coalition government. Now, we're not really expecting this government to be able to get a whole lot done. We have seen a little bit of improvement as far as the DAX is concerned. It's trading up around 1% so far today. We've also seen a little bit of a recovery in the euro as well. However, it's also worth pointing out that data from Germany today has highlighted the struggles that the new government will be facing. There is a very weak German economy. GDP data tomorrow is expected to show that the economy contracted again in the final quarter of Q4, and we're looking at a contraction across 2024. That will be a second straight annual contraction after we saw a contraction across 2023. Now, if we do see weakness again in 2025, that would make a third year of contraction, which would be the first time that Germany has experienced such extended downturn since its post-war history. Now, also, as I mentioned, we have the negotiated wage rates for the Eurozone. Now, these are interesting, as I pointed out, because they will give us some clues over inflation. Obviously, if we get sort of very hot wage growth, then that can lead to a higher inflation pressure, higher inflationary pressures. But obviously, if we get cooler wage growth, then we know that in the Eurozone, there is sort of tendency for a downturn in the economy. There are more concerns about a downturn than there are sort of an uptick. And inflationary pressures, they are a little bit hotter than that 2% target level. But ECB policymakers seem pretty sure, pretty confident that the inflation will be back to the 2% level by the summer. So, still expecting plenty of cuts, several cuts from the ECB. Now, here I've got the euro US dollar chart. Now, it's interesting because the gains that we saw today for initially in the euro following the results of the election have actually now been given up. Can we see there's that long upper wick on the candle? We didn't get over that 105.30 level, which has proven to be a little bit of a headache for the euro. It's failed to get over that high that we saw on the 27th of January, has since fallen back down. But I mean, we're still above the 50 SMA. But buyers are going to really need to get above that 105.30 level in order to extend gains towards the 105.50 and on to 106. But I think it's worth pointing out, if we get weak negotiated wage growth and we get perhaps a deeper contraction in Q4 Germany than initially feared, then that could put pressure on the euro. And on the downside, the couple of levels to be watching for, obviously got the 104.50 round number here, and on the downside the 50 SMA, which has managed to sort of play a relatively important role at this dynamic support, but that's at 104. If we get a break below 104, that brings 103.40, which is the November low, back into play. Just let's also have a look at what's going on in the DAX. As I said, we saw those strong gains this morning in the DAX. Has given up a little bit of those gains, but I mean, the uptrend in the DAX is still well and truly on track here. We saw that the DAX broke out of that upward channel and rose to a fresh all-time high just at the end of last week of just shy of 23,000. Fallen off at the end of last week, but we have seen this recovery from the rising trend line, the upper band of the rising channel, and that's really helped propel the price higher. As far as this is concerned, as I said, the uptrend is still very much on track. We've seen the RSA come out of overbought territory. The DAX is obviously finding some support from the fact that they expect the ECB to continue cutting rates. But let's not forget, there are some lingering concerns still regarding Trump's trade tariffs and what that might mean for the automobile sector, particularly in Germany. But as far as buyers are concerned, they're going to be looking to get above that 22,500. That was sort of around the highs for today in order to extend gains towards the 23,000 level for a higher high above there. On the downside, I think if we do get a break below that 22,150, that was last week's low, then that could see the sell-off sort of extend back towards the 21,500 level, and then down on the downside 21,000 is also a level to be watching out for. But as I said, it does look like the uptrend is still intact as far as that's concerned. We do have Bank of England, Hugh Pill will be speaking tomorrow as well. But I mean, the main focus is going to be on the US dollar and US consumer confidence. Expecting to see a little bit of a downtick in consumer confidence. Now, obviously, this data comes after Friday's fall in the Michigan consumer confidence, Michigan sentiment index, which dropped to its lowest level in 15 months. We also saw the PMI data in the US was much weaker than expected, particularly the dominant service sector. So there are a few warning signs that are just sort of appearing after such an extended period of US economic exceptionalism. Now, there are concerns with regards to Trump's administration's policies and what that might mean for businesses and households alike. And that's where we're seeing this sort of concerns regarding the outlook of the economy coming into play. So this data will be watched quite closely. If we get weaker than expected consumer confidence, then we could see a fall in the US dollar. Now, a fall in the US dollar could help sterling US dollar push higher, even though we've had the Bank of England sounding a little bit more gloomy perhaps than we would have liked. But we saw at the last meeting where they cut rates by 25 basis points, they also slashed the growth forecast for the UK. And now we have seen stronger than expected retail sales data, stronger than expected services PMI, which has really helped support the pound and give it some momentum at the end of last week. But we'd need to see that, as I said, the weaker US consumer confidence data in order for the pound to be able to push above that 200 SMA. That's the key level there, around 126.60. That's what we need to get above in order to bring the 200 SMA at 127.90 into play. Stronger than expected US data could see this pair come lower. Look on the downside around the 126.15 level. That's the low that we saw in June last year. And then below that, you've obviously got the 125 round number and the 50 SMA at 124.70. They're the levels to be watching on the downside. But if we can see, this recovery has been quite encouraging from the 121 low. The RSI is above 50, so momentum is in favor. But as I said, we need a rise above that 100 SMA in order to extend those gains. Then just finally, we've also got the, let's have a look at US stock markets. US stock markets actually closed down last week, despite reaching those record highs. Now, a couple of things are in play here. We obviously had that weaker data that I talked about on Friday, which unnerved the market. But we also had comments from Walmart when they released their earnings about sort of concerns over the outlook for the consumer and sales forecast. Now, we've got Home Depot sales results coming out tomorrow, so it'll be very interesting to see if we get further insight into the outlook for the consumer. Again, if we get some concerns and we get weak consumer confidence, then I'll be watching this 50 SMA there at 6,000. Not only is that a key psychological level, but it's also this dynamic support which has been holding up pretty well over the past couple of weeks. And we're feeling, all those moves lower. We had the long lower spike on. So let's just see what's happening, because that bearish engulfing candle is quite it's quite dubious. But I mean, the fact that we found support on the 50 SMA is encouraging, but we just need to see what happens as far as that 50 SMA support is concerned with regards to data and Home Depot's results tomorrow. A break below that, going to bring that 59.15, 59.20 level into play, which was the low that we saw in February and at the end of January. Get upbeat numbers and encouraging earnings, then watch out on the upside for the 61,000 and 61,000. A rise above there will create a higher high. So I hope you have liked everything that we have seen today. And there's the risk warning. I'll just bring that up for you. I look forward to seeing you again tomorrow.